It's decision time at the US Federal Reserve, which is deep into discussions now on whether to raise interest rates for the first time since 2006. September has long been flagged as the month for a possible rate hike, but conflicting economic data could prompt a delay. Sohn Jung reports.
The U.S. Central Bank's rate-setting committee has kicked off its much-awaited September meeting. During the two-day affair, the 12 members of the Federal Open Markets Committee will discuss whether to raise interest rates for the first time in more than 9 years. Global economists are evenly split on the pivotal decision after some conflicting signals from the latest economic data. On the plus side, the country's job growth has been improving. The U.S. unemployment rate fell to 5.1% in August, a level the Fed sees as likely to boost both wages and inflation. On the other hand, consumer prices took an unexpected tumble in August. The U.S. Labor Department said Wednesday that its consumer price index, a key measure of inflation, slipped 0.1% from July after having risen in the previous 7 months. Another inflation measure, the Personal Consumption Expenditures Price Index, was up just 0.3% in July from a year ago. This is why some economists believe the Fed will hold off on a rate hike until later this year.
Inflation target is around 2% over the next 2 or 3 years. That forecast is not there. There is no need to rush to do it.
Korea is among the countries eagerly awaiting the outcome of the meeting. Local officials have projected that if Korea's lending interest rate increases 0.25 percentage points, assuming the Fed raises its rates, it would result in an annual loan interest income of $1.5 billion. The committee's decision will be announced on Friday at 3 a.m. Korea time. Fed Chair Janet Yellen is expected to hold a press conference shortly afterward to explain the reasons behind the move. Sohn Jung, Arirang News.